All right. Well, let me begin by saying hello and welcome to another weekly edition of Stock Market Mutterings. This is for the week that begins on the 29th of July, which should be a very interesting week. We'll get to that in just a minute. This is where I will take a grope in the murkiness and try to find you some quality trade setups, and I ultimately hope that puts a little bit of money in your pocket. Now, before I get started, as I always say, if you guys need help with your trading, I want to post a link right here. Take a moment and visit this link. As I've said over the last couple of weeks, I've completely updated the educational section of the website. We now have the live trade room, the live trade feed, over 100 hours of both paid and free content. And this week I just added private training sessions. So no matter what educational level that you're trying to achieve with the stock market, you will find it there at thelinkinlist.com. Go ahead and click the link. Now, as I said, this should be an interesting week because this is the week the Fed meets, and we're going to find out what's going to ultimately happen with this so desired and much anticipated rate cut. And I know it sounds crazy, man. I've been doing this for a long time, and this is nuts to think about. The stock market right now is making an all-time high like every 3 days. Unemployment's low. GDP is good. I mean, theoretically, there's no reason to cut rates, but this is what the market wants. And over the last, I don't know, umpteen 100,000 years, it seems like, obviously that's an exaggeration, the Fed has just caved in and done whatever the market wants. So right now, it appears as what's priced into this market is a 25 basis point cut. We're going to find out because they meet on Wednesday. So are we going to see 25? Are we going to see 50? Or are we going to get nothing at all? That would be pretty interesting. So nothing that we can do about it. And I know when you talk about these things, this is one of the difficult things that traders have to deal with, is trying to separate your emotional connection to the market, your emotional biases, with what's really happening. Now, whether or not I think this is nuts or the herd thinks this is crazy, it doesn't matter. I don't set the interest rate, so it's not up to me. As a trader, your job every day is to just play what the market gives you. Some of those days, it's going to be really, really nice, and everything's just going to kind of fall right in line just the way you wanted it to. Most of the time, that's not going to happen. You're going to have to work yourself around. You're going to have to make adjustments. That's just what we do. Now, the reason I wanted to touch on that topic real quick is because when you look back at your larger losses as a trader and you look at your biggest faults where you've just screwed up the most, think about when that happened. That's normally when you've allowed what's taking place right in front of your eyes, what your eyes are seeing, and what's really happening. Letting your ego either get in the way, letting your emotional attachment to a particular trading vehicle, just getting too emotionally involved with something like that. Ultimately, when you think about those big losses, I bet that's where a large portion of those came from, because I've always said this over and over again, you normally get a sign somewhere that tells you, hey, this trade just ain't working out. And normally at that point, it's not so bad. Like when the loss is not so bad, or you're not upside down so bad. And you're like, but I still think it's going to happen. I still want it to happen. And you allow that ego, you allow that emotion, you allow all that stuff to come in there. And then it gets worse. And you wish you would have taken it. So what I'm saying here, guys, is this. We don't make the rules. Us little retail traders out there, even the bigger retail traders out there, we don't change jack shit with this market. The couple of hundo shares that we buy in a company doesn't do anything to it, doesn't even blip it on the radar. We're just basically traders that sit here, wait for the big plays to happen, wait for the right setups to take place, and then we act. So there's a little edumacation for all of you today. Now let's go ahead and get right into it, talk about it. I don't have any specific levels to look here because I'm not going to act like I do know what's going to happen here on Wednesday, how the market is going to take it. Again, that's not up to us to decide, and I don't know, and I'm not going to try to waste my energy figuring it out. I'll know when it happens, what I'm supposed to do, and I'll plan accordingly. Now, this could make it to 310. I would think if you get a 25 basis point cut, that you'll get at least a knee-jerk reaction, and something may happen after that. I would expect going up to that Monday and Tuesday, we don't see a whole lot here. It's probably going to be a little bit of the action that you saw, what am I trying to think here? For the Jerome Powell Congress testimony. Yeah, that was the beginning month. That's what I was trying to think. It was like on a Wednesday and Thursday there at the beginning of the month. So you had like a tiny, tiny drift. And then as soon as he opened up his mouth, explosion took place. So I would expect some choppy, sideways, positionable trading. There will definitely be opportunities in select names, or certain things will happen based on news. But that's what I would expect. And basically I'm saying I wouldn't expect any sort of monstrous down move, heavily selling. Could happen, but I wouldn't expect that until Wednesday or later if that's something that takes place. Now, depending on how this pans out, if you start trading underneath of I'd say right now the 20 moving average on the daily here in the SPY is 298. Maybe if you start pressing under there Wednesday, Thursday, or Friday, you start seeing some aggressive selling and you start working your way down into the lows from the middle portion of this month, which is like 296, then maybe you could start to think about a correction. Now, when I say correction, I'm not talking about bear market correction. No, maybe 2, 4, a 5%er, and that would be good. And the reason I say that, for some of you might be listening for the first time, corrections are healthy events for the market, because if you're buying something here, just about any stock that you're looking at, like I said, the market's making a high, all-time high every 3 days, it seems. You're paying max price. I mean, you're up paying for everything right now. And as a trader, you have to do that sometimes, because you, like I've said before in whiteboards and stuff, you are forced into, not like forced into trading, but if you're doing this for a living, you have to make trades. You just can't sit on your hands over and over again. So you've got to make plays. You can definitely adjust that with position size and stuff, but that's another topic. So you're paying max price. When you get corrections, it allows you to take advantage of stocks, get a discount on them, which is nice. I mean, you want discounts on everything in life, right? Why wouldn't you want stocks? It allows you to pick them up at cheaper prices and then ride them back to all-time highs. But again, maybe I'm getting a little bit ahead of myself. We'll see what happens. Let's just put it that way. But unless we get under the 296s, I still anticipate everything acting the way it does. And what I mean by that is most of the dips outside of earnings losers or specific hit pieces or generated news towards a specific stock, dips will get bought. So if there's a stock that's dumping a little bit in the morning, or there's a little bit of red on it and there's no specific news hanging over top of that, most likely that thing will nestle down into support, maybe close the gap if it gapped up, or it'll build a pattern, and then within an hour or two, it'll start climbing its way back up. You're going to see about 90% of stock charts look like that. So now I'm going to move on and give you a couple of these names, because I want to stay in that frame for now. And I like to look for strong stocks for this moment in this market environment over the last 6-7 months. I'm looking for strong daily charts, strong trenders, and I'm looking for any type of pullback I can get on that stock and try to pick up some long shares and let the market do what it's been doing. I like this COUP. This has been a kind of chart pattern that has really, really worked this entire year. And I mean, look, I don't have to say anything about how bullish this chart looks. I mean, you can see it with your eyes here. From April, this thing has maybe had two or three really down days in it, period. And they weren't that big, but you're just walking up the 10 moving average. Last little sell-off here, just kind of climbed to a new high on the 19th. Rolls over here just slightly below the 10 moving average and close to the 20 moving average here of 138.50, curling right back up. Lulu looked like this before it broke out. We've been talking about that stock religiously over the last couple of weeks. 147.66. You get up there, that was the highs there from Friday. We got a little tail off there late in the day, but I'd watch this. I'd watch this on any sort of dip down into the 144s to the 142s. If you begin the day with some sort of gap down or any sort of panic pressure, that's always a scenario that could happen. I'd look to pick this up. If it holds those levels and never even gets down there, and then you start to see this move back above 147, I would say odds are this goes right on through that, and it looks like the type of stock that's probably going to get to the emotional 150. I mean, one hell of a strong chart pattern here. Definitely a top dip buying stock. It may not provide the larger ranges as something like what the Tesla or Netflix or Nvidia on an intraday basis for those day traders out there, but you still have some value here. So watch this COUP. Also here, I'm giving you some new names because there's always, when we talk about like Apple, Facebook, Nvidia, Baba, there's always a trade every day in those names. So they're just like permanently fixtures on a watch list. But SGen, not too bad. I mean, look at this. It's like a cartoon drawing. Like it's deja vu. Look at this thing. Now, this was already mega bullish. A really good setup here. They do a secondary, I think. Don't quote me on that. I'm just using old man memory here. But I think they did a secondary or an offering here. Dumped this thing. And, this is another thing to pay attention to, is a lot of times traders, investors feel that a offering is a bad thing for a company. And it's not. It's not. I mean, isn't that what their job is to raise money? They want to raise money, raise capital, and use that to invest back into their business. That's why they're public in the first place. So it's not only necessarily a problem event, but you do get an idea of how the herd takes that mentality by the way the stock trades. And here this thing, I mean, what a hell of an opportunity if you happen to grab it. I did not. But, I mean, this thing goes from 75.20s, gaps down to 69. And practically one day, I mean one day, it shrugged off that offering and back up. And it works the same thing with a downgrade. If a company gets hit with a downgrade, sells off for one day or half a day, and then shrugs that off and turns around and fires its way back to green, you normally see a lot higher prices. TTD, for example, TTD being downgraded last week, and then look what happens to this thing. I mean, it just shrugs it off like it's nothing, and then you have this monstrous move, albeit aided by some Amazon news, but I think you understand what I'm saying. So for some of you new traders out there, it's not always about technical analysis. It's a lot of times it has to do with common sense, is that you see something get hit, you see something getting downgraded, you see poor earnings, you see something that should be an obvious red flag get shrugged off like it's nothing and rally back, you almost always see that thing go higher. So this could be one of those. Now the chart pattern's definitely strange. It should be strange, Jen, but I think you'll at least trade back into the gap here of 75.60, but I would be more interested if this thing got back into the 76s. I would think it will toss this range it's been playing around with and probably go right back to the 80s. Now that may take a couple of weeks to develop. It might not be something that happens right away, but pay attention to this, set a couple alerts. SGN is something that should be on watch. Now when we start talking about daily charts, I want you to get a load of this thing here. CTAS. CTAS is about ready to haul ass, in my opinion. I mean, you don't get any tighter than this. This is another good setup for some of those that might be new to technical analysis or chart patterns that have worked well in this environment. And that is, you know, a lot of people chase the big earnings players. You get a big move like Google on Friday, $117. People want in on it. They got that FOMO going on, and they usually pay a horrible price. But if you missed out on it, rather than chase, what helps a lot is if you sit still for a couple days, let it shake its way through earnings, let it tighten up. If it holds those earnings gains, consolidates, then makes another high, just like the shrug off the downgrade, you almost always see more highs. Same thing here. You had your big gap up day on earnings, which was on the 17th. From that moment, it's just pretty much stayed real tight there between the mid 260s. Pretty good close on this. The number that you're looking for is 260, 270. If this clears the highs of 260, 270, it probably catches some fire, catches some bids, and runs. I'd pay attention to it. Just set yourself an alert up there. See what it looks like if it does get there. But a very, very nice looking chart. Dips have been continually getting bought on this. So something there that you want to look at here with CTAS. And then maybe SQ. I know maybe the lion's share of the money here has been made. This is what we're talking about. And we did mention this in past market mutterings. Is, you know, this one fondled around with these range break here at 74.50, and then finally when it did it, you got this big vert move. And this is what I say, when they bust through those highs or they bust through those range, they take off. And this thing had a huge 4-day run. Now since then, we're about a couple of weeks of trading past here. It's kind of got a chance to nestle in, albeit it's not as tight as the CTAS. And you do have earnings coming up here on the 2nd, so I'd pay a little bit of attention to that, but you do have a couple of more days that you might see, in this case, a pre-earnings run. Stocks have a tendency to do that. Sometimes people get emotional, whether they're going to be right or they're going to be wrong, but they buy them into earnings. I'd look at 82, 83, let's say 83. You get up around 83, you might see a little bit of a nice break. Same thing though, intraday dips are getting bought on this. So if you happen to open up down, it's in the 80s, let's say 81s, 80s. You always have to prepare for that. Not 81s, excuse me. I'd say down under 80. You might want to pick it up. I don't see this thing selling off back under the 10 moving average until earnings. So something there to look at. So we'll go with additions to the normal, like I say, Apple, Facebook, Amazon, Google, Google throughout this week. Those types, BABA, NVIDIA, Netflix, always a trade there. They should be on your, if you're trading bigger caps, those should be on the list. But I want to add COUP, SGen, CTAS, SQ, and maybe even some TWLO. I've been liking this stock a lot lately. It's been a really good player. They've also got earnings coming up. I don't trade through earnings, but nice chart here too. You got like a quadruple top working up here at 151. 151. So I don't expect a whole lot of fireworks pre-Fed, but I could be wrong. I'm not going to act like I know everything. No, I need to act like I know at least something, right? But we'll see what happens. We'll see. Again, if you need help with your trading, take a moment, visit thelincolnlist.com. You need a little extra education, take a moment, visit thelincolnlist.com. Trade them well this week, guys. Hold tight. If you need any help, always feel free to reach out to me at support@thelincolnlist.com. I will chat with everyone next week and give you an update. Take care.